In a brief summary, can you explain what the Greater Springfield Board of Realtors is and what you all do?
Sure. We're the trade association for those real estate licensees who want to practice in a way that they're designated as realtors, both in their practice by adhering to the code of ethics and other codes of conduct that we have. They are members or subscribers of our MLS system. And realtors are different from just people who are licensed real estate agents because of their adherence to those ideals. And so we are the central hub for all of those in the real estate community who are realtor members.
Okay. Well, we are coming to an end of summer here, and fall starts Monday. And so I thought it would be of interest to do a bit of a roundup of how the summer was as far as real estate goes. I know that you all put out statistics every
Mm-hmm.
month on how things are. Now, those statistics that you put out, are those purely residential statistics?
The statistics that we publish each month, yes, are residential only.
Okay, gotcha. So August just came out, and some of these numbers that you all have are 582 homes sold this month, and this is for the greater Springfield area. I want folks to keep that in mind as well. So it's not just Springfield, Greene, Webster, and Christian counties.
Yes, yeah. Green Christian and Webster is our defined market area for these.
And I'm seeing 582 homes sold in the month. $272,500 is the median sale price. Average days on market you have listed at 35, and then you've got the big giant number of total sales volume there. So which
Right.
maybe just means more to, I don't know, maybe just to realtors than perhaps the average person.
Yeah, well, that's a big number. I mean, I don't know exactly how much that means to realtors either, other than as a gauge of is the volume higher because prices are higher, or volume higher because of the units have changed. It's more or less an index really of the state of the market.
Gotcha. Okay. Well, we were talking a little bit before we got started here about how things have looked not only in August, but also the summer as a whole. How would you describe how the real estate market was this past summer?
Well, steady is the word that comes to mind, so I'm just going to stick with it. I mean, if you look at the statistics in August, indicative of the summer as a whole, the numbers are very similar to the numbers from 2024. So, steady is the word.
Gotcha. I see we'll take May and June, for instance. There were, in May, 685 homes sold versus 651 in June. And those numbers kind of trickle off just a little bit into the upper 500s for July and August. How does the early part of the summer differ from the latter part of the summer?
Well, first of all, it's a little bit cooler to go out and look at houses. So it's when school gets out, there is a summer excitement that occurs. Everything looks green and lively. And then you start kind of getting into vacation times and trying to get those last minute activities in August. So you do see, the spring activity, but that's more indicative of just the patterns that we as Americans follow in our lives, as opposed to, the forces on the market.
Heard. Okay, understood that. When it comes to median, the median sale price here, what does that number mean to you all? How do you use it when it comes to what you all do, and why is it important for both buyers and sellers?
Well, it's over the last few years, it's just been an indicator of overall accessibility or the affordability or attainability in the market. I mean, again, you can use that as kind of an index to plot in a singular sense. I mean, in August 2025, the median sales price was 272,500. In August 24, it was 280,000. So, I mean, you could get really scientific and say, oh, there's been a $7,500 drop in median sales prices. Well, that's statistically not a real significant gap. I look at that and say, okay, median prices, um, you know, are steady and pretty much the same. If you compare that, and I don't have the number in front of me, but if we were to go back to August 2019, you would see a significant difference in a median sale price. So it's kind of like looking at the stock market. You can't look at the Dow Jones index one day and draw a whole lot of conclusions. But when you start plotting that graph of median sales price, and statistically speaking, median sales prices, if you took all of the home sales in an area, and for us again it's defined as Green, Christian, and Webster County, and you found the sales price of the transaction in the very middle of that, that would be the median. So plotting that over time gives you a real sense of what prices have done. And of course, in our market, that has been a significant increase in the last 5 or 6 years.
Gotcha. Something in the news recently that I think is something that people have been waiting to see if it happens or not is the Federal Reserve possibly cutting interest rates for the first time this year, and really for the first time in quite some time. How does that, if a rate cut does come, how do you think that affects the real estate market, I guess, here in the Ozarks or beyond?
Well, it affects it in three different ways. First of all, when you get when you get into an environment that seems to be more rate sensitive, you have potential buyers making decisions on whether they're going to buy now because it's a good time, because rates are relatively, and relatively being a very big word in this, relatively lower. Or you can get periods where prospective buyers don't decide to enter the market because they're waiting for bigger changes to come or more changes to come. So I don't want to get into the market now because I'm thinking that they're going to lower one or two more times by the end of the year. None of which, in this context, and in the amount that the Fed is going to lower rates or not lower rates, is a hugely significant amount over the course of a 20 or 30 year loan. But that's the psychology that plays in here. Obviously, when you get into a time when median sales prices have risen over a number of years, you start calling into question the overall affordability of the market and whether the prospective buyers, especially first-time buyers entering the market, can do so and afford the resulting payments, regardless of whether the Fed lowers or not. But certainly, if they do, it can have an impact on that. Probably, especially at a time when inventory is still historically or relatively low, those interest rates have an impact on the seller side too, because when for us, we had a period where we had extremely low interest rates. People bought houses. A lot of people bought a house and then later refinanced when the rate went real low. And so with the rise in interest rates, not to hit a historically abnormally high level, mind you, but just normal interest rates, that higher interest rate can have a huge impact on the number of properties coming onto the market, because if somebody owns a present home and say their rate is, as low as 2 or 3, they're going to, if they were to sell their home, they're not going to buy a home with a possibly significantly higher interest rate. And so they may think that, oh, maybe I won't do that because I'm giving up my extremely low interest rate that I've got on my present home. The problem with all this, and this is where I probably would have done better with a psychology degree than studying business, is that in the course of the human life, moving or not moving because of a quarter point or a half point, or I'm not going to get the home that I dream of having because the rate I got on the last home is what it is. Just, the whole point is for us to enjoy our life. and and
Yeah.
sometimes some of this delay psychology, you know, gets in the way of that. Now, obviously, there's an investment sense there too, but um, people get into kind of like these uh, guessing games with themselves and second guessing games, and it's all in there. But the idea that I would be sitting in front of my television with bated breath, waiting to hear what Jay Powell has to say, is not going to happen.
I think the last question I would have for you is, if folks are looking to be buyers or sellers in the near future, what advice would you have for each side?
Uh, you know, uh, do your due diligence. Springfield, the greater Springfield market is a growing market. We are a healthy market. We are a community. We don't um, get the highest highs or the lowest lows of some other markets. This is I've lived here all my life. It's a wonderful community. It is always a good time to consider what you want and need to do for um, your stage in life or happiness or whatever the case may be, and not to let the noise from the sidelines interfere with your enjoyment of having the right home.